Morning, guys. So welcome to lesson 5 in the business and entrepreneur lessons for beginners and for people who want to have the formal information, the formal knowledge on the base of a business. What are the principles that sound businesses are built on? What are the principles that sound entrepreneurship is based on? And that's what we want to give to you. And in lesson 4, we talk about the 2 parts of your business accounting processes. First part was the revenue side, how you get your money. We started at product, we went through the whole idea of product. Now we're at the accounting aspect of business. So it is product accounting. And we were talking about basic accounting, not something that's going to send you to do taxes and sit in accounting seminars to go over all the jargons and all the fancy terms that, you know, the accounting discipline is in, and nothing is wrong with it, but I'm just telling that you do not need that, because all the books and the way they're telling you debit and credit to do these days, the computer systems do it for you. If you're not an accountant, you don't have to worry about the whole depth of it, right? You drive a car, you're not a mechanic, you don't worry about the whole depth of it. If something is wrong, you know pretty much the basics. You can operate a car, but you're not a mechanic. What I'm teaching you to do is to operate your business on sound accounting principles without being an accountant, and get the same results. When it comes on to the time for the accountant at the end of the year, you'll be able to get it. So now let's move on to the expenditure side. So everything is about income and expenditure. What's going in, what's coming out. What's coming in is revenue. What's going out is expenses. Expenses are the output, the costs of operating your business. It is really and truly how much it is costing you to get the money that you are getting. So if you're going to make $50 at the end of the month, let's say you drive around and you cut lawns, or you prune edges, or you clean homes, whatever you do, you're incurring a cost to do that. You have to eat lunch, you have to buy gas, you have to pay taxes, all that stuff. Those are the costs you incur. And then when you get paid, then you have spent all this money to get this pay. So the expenditure is the cost that you incur to collect the revenue that you collect. All right. So the first bit of the expenditure side, or the holy grail of expenditure, is first to minimize them, and second to capture them. You have to, let me go to recording first. You have to have records. You have to have records. I'll tell you a quick story about a guy I was working with. He has a restaurant in South Florida, and I was doing some work with him in his business, trying to get it up off the ground, trying to get it organized and set his system. So we spent a couple of months and got it done, and it was a good business opportunity. He saw it, he bought the restaurant, and then he started to operate the business. It was going great. Business was going great for 2 years. Some of the things that we talked about. Firstly, when he was trying to buy a point of sale machine for his business, I told him to don't buy a cash register. Cash register just crunch numbers and add for you. It's like a big adding machine that have a roll of a printout for you. That's what a cash register is. A terminal, a point of sale terminal, is more sophisticated. It has a software that is capturing what is happening at your front end. So you can itemize your sales, and it will give the name of the items, it will capture it, it will categorize it, it will tally it, it will put times to them, it will show you all the activities that's happening in a transaction. And we went through a couple of them. The cash register was costing him something like $350, $400. The point of sale terminal was costing something like $2,000, between $1,500 and $2,000. He refused to buy it. And I told him, I explained to him why it is important. I said to him, if you do not know what is happening, you might not know what to do if there's a problem. It will always seem okay until there is a problem. And if the problem comes, these things are something that you cannot go back and fix. You have to keep proper records if you are to scale, if you are to grow, if you are to have a good handle on your business, if you are to know what is happening in your business. If you don't know what is happening in your business, you're not running your business. If you don't know what is happening in your business, you're not properly running your business. You have to have the information. You have to know how much sales you're making. What is your best selling item? How much it costs you to sell your best selling item? What time of the day you sell most? What days of the week you sell most? How much you sell in a month? What's your cost in a month? You must at least know those things. You must know them. You have to know which item is doing well, which is not doing well. What time of the day, what time of the week. You have to be able to track your numbers. It is very important. If you can't track it, if you don't know what is going on, you cannot make intelligent, progressive business decisions. Fast forward about year 4, he started having problems, and he called me up again. He says, Lowen, I think I'm having some problems with my sales. My sales have dropped drastically. I have to cut some staff. I may have to close some days and that stuff. So I said to him, so which are your most profitable items, meals? What time of day do they sell? Which days of the week are your best days? He couldn't give me. He was guessing. He didn't have any record to go and check, because as he admitted to me, if I knew which days were good, then I could easily just run into a thin staff on a couple of days, or open later on these days, and on the days that I know that these are my best days, when my sales are higher, I can just easily run a full shift those days and open earlier. But he didn't know, and he struggled through it until he eventually had to close the business. All because he didn't get tools that can give him the information he needs. You must collect the data. You must collect the data. You must capture the data. I'll say it again for the last time. You must collect the data. You have to find a way to do it. If you want to use a card to do the business stuff, you have to find a way to separate the business from your personal expenses. You have to have a formula, a method that you work out. You know how much you spend because you go to work, and you know how much you spend because you do school. And when you come to the end of the year, get your accountant. If you're running from home, get your accountant to appropriate the bills and get your tax reliefs. That's a whole other subject. But for now, I'm telling you to collect your data. Now, let's get to this crucial part, which is minimizing your expenditure. You got to be capturing them, but you have to be looking to say, how do I minimize them? I call them optimize, meaning getting the maximum with the least. You have to find ways to save on costs. If you don't need a full-time staff, don't get a full-time staff. If you don't need a big vehicle, don't get a big vehicle. If you're buying gas when you're on the side of town that is cheaper, fill your tank. If you're buying stuff that you get a price break, save your money, buy in bulk. Find a way to say, okay, these are my expenses. This is what it is. This is my revenue. Because the best way to have increased revenue is and the best way and the most controllable way to have increased revenue is to cut costs. It's not easy to find 10 more people to sell to make $500, but you can look at your numbers, and you can, at your own control or with your own initiative, you can go in and just cut some costs. There's a lot of excesses and baggages that people attach to their business, and they don't realize that it is piling up, it's adding up, it is becoming a problem. You must find a way to minimize your costs. If you can bring your costs down, it's the best way to increase your revenue. So, how do you bring your costs down? Well, you first have to know all your costs. You have to capture all your costs. You have to have them somewhere to look at. We call this the expenditure side of what we call a profit and loss statement. So there is the revenue side of the profit and loss statement, and there's the expenditure side. Revenue side is all the income sources that you have in your business. How are you making your money? What's the total money you're making? And how much is the direct cost? The direct cost only for making this. So let's say you're selling, I'm not going to use tires again. Let's say we're selling cases of sodas, and we sell 100 every month. Or we purchase 100 cases of soda. We sell 100 cases of soda every month. It costs us $1,000. And when we sell, we get $2,000. So 100 cases of soda costs $1,000. So that they call your cost of the goods that you have sold. So the cost of the goods of selling the $2,000 is $1,000. When you take out that cost, that $1,000 that you use to purchase the goods, that's what you give the supplier. Okay, put it this way. The guy who sells you your goods, the person who you buy your goods from, if you're producing stuff, it's a little bit different. It's a little bit more complicated. But the guy who you buy your goods from, the money you pay him for those products are the cost of goods sold. When you take away his money from how much you make when you sell all that money, then you get the gross profit. Gross profit means profit before expenses. So when you buy the goods, the cost of goods sold is the amount of money you pay for the goods. And then the sale is the amount of money that you, minus net of taxes, that you get when you sell the goods. So there are two things coming out. You take out the tax, you take out how much you pay for the goods in total, and you will have from the sales, and there is your gross profit. Now we're going to get to the net profit, when you have itemized all the expenses that it costs to run your business and take them away from your gross profit, that figure you have left after you take away how much you pay for the goods and the taxes. When you take away those, the expenses for running your business, all the things that go into it for the month, that will be your net profit. That's how much you have to keep. That's how much you have for yourself and for your business. Get it? You may have to listen again to actually get it. You can ask me any question if you want. But you have to look at your expenses and try to minimize them. I am guaranteeing you that if you don't track them, you will be missing a bunch of them. Are you looking at your bank statement? What are the bank charges that you're incurring? Are you adding up and encompassing all your gas bills? Are you adding up the money that you use to buy stuff for the vehicle? So you have to capture all your expenses. Sorry for that little break. And once you start to capture your expenses, it means you have it collated somewhere. There are data available for you to do decision making. Most decision making are premised on the data, the numbers, the information. If you don't have the information, you will make poor decisions. So it's not about complex accounting information. It's not about all that type of stuff. It's about doing the necessary thing to gather the information and knowing your numbers. That's what it's all about, knowing your numbers. Once you start to know your numbers, then it will make a huge difference with regards to how you approach your business and how you record those. We'll talk about later, because you're gonna need a system to actually make this easier for you, a system to show you the information in a more informed way, for want of a better word, because the raw numbers is the data, and when you compile it in reports and in charts, then it is information, because you can make decisions from that. That's what you want to do. You want to make sure you are collecting the data, you are recording it. Businesses have records. Businesses have records. You cannot run your show without records. Things to give you the data you want regularly. Most people look at their data every month. When you're starting out, you might need to look at it every week to know what is happening in your business. Because if you don't know what is happening in your business, then you're not going to be able to make the right pivots and move. Thank you for listening to this lesson. I look forward to moving on to the next lesson. Talk to you soon.